got it.
Hello, everyone, and welcome to your daily stock report brought to you by QualityStocks.net, where performance is tracked daily. I am Cathy Rankin, and for Wednesday, March 14th, we're bringing you the latest news from around the markets as well as the top movers to look out for today. So in our headline news, stocks tumbled Tuesday as an overly pessimistic market exaggerated everything from the implications of an unwinding in the yen carry trade to potential default by subprime lenders spilling over into an economy that again showed signs of slowing. Before the bell, February retail sales rose just 0.1%, while the more closely watched sales ex autos unexpectedly fell 0.1%. Both figures pressured a market already extremely sensitive to signs of potential economic weakness, even though unseasonably cold weather was a likely cause for the soft report. It is also worth noting that the data won't alter expectations of about 2% real GDP growth in first quarter. However, with some prime mortgage worries acting as an overhang for weeks now, more negative developments in the space took a weak stock market and made it even weaker, provided a perfect excuse for sellers to take some money off of the table following 3 straight days of gains for the Dow and S&P 500. Now, Accredited Home Lenders was the latest company in the subprime lineup to warn of such difficulties, saying it needs to raise new funds to cover the risk of default. The stock plunged nearly 70%, and adding insult to injury was Countrywide Financial CEO saying on CNBC that the subprime issue is becoming liquidity crisis. But the straw that broke the backs of buyers today was a report midday from the Mortgage Bankers Association, which showed delinquencies among subprime borrowers hit 13.3% in the fourth quarter. That was the highest rate in more than 4 years and overshadowed a blowout report from Goldman Sachs that discounted the overall impact of something we believe isn't going to have a material impact on the economy. Nonetheless, the damage was done as a 3.2% sell-off in the most influential of all S&P sectors, the financials, pulled the rug out of the market and left buyers sidelined into the close. The Dow, S&P 500, and NASDAQ plunged at least 2%, forcing the NYSE to institute downside trading curbs. Of the 147 S&P industry groups, 146 posted losses. In our small cap news today, it's brought to you by Navori Incorporated. Navori Incorporated is a